And so we're just not used to this kind of inflation. This is a spike. I don't think the Fed is behind the curve. I mean, today definitely bolstered the argument for 50 basis points in March, but I'm still not in that camp. I still think they're going to have room to raise rates as necessary in between meetings. So I don't think we're in the dire straits that Peter thinks we are, although his points are well-grounded, and I've heard them before.
So rates rising even in between meetings, you think that's completely on the table? And would you, I'm assuming you'd even recommend that, Peter?
Yeah, I mean, do you think...
they need to raise rates. They need to raise rates.
Okay, first of all, look who's already been proven right, Peter, because they had to do an emergency meeting, and this was 3 days ago. This little session took place between these two. So, establishment to the left for the people on the right. Just remember that.
Right now. I mean, they need to stop quantitative easing. They need to start tightening and shrinking the money supply and removing all this liquidity. The 10 years of low inflation that we had, we're about to pay the price for that because the Fed kept creating inflation, printing money, and staring at the broken CPI and assuming that because the CPI wasn't having a reading that was above 2%, that they had the green light to create more inflation. Well, it works with a lag, and now we're catching up to all the inflation that we created over the past decade, and it's just starting to take hold. And we really dialed it up starting with the pandemic. That was the worst possible combination of monetary policy because as we ordered people to stop working and people went home and were no longer producing goods and services, we gave them additional money to buy the stuff that nobody was producing. So we had even more money chasing fewer stuff. We have an inflationary tsunami, and we have barely even caught up to that. This is just getting started. Unlike the 1970s where we were ending inflation, we're just getting started, and the Fed is at zero. And we have so much debt. We didn't have all this debt in 1980.
And I give credit to this lady at Fox Business because she has talked to Peter before and had him on in these kind of forums. And for whatever reason, she kind of leans to favor him. Like, she understands, she can't say it, but you can hear she's an intelligent woman. She understands what's going on here, but she can't say it because she's paid by the establishment.
When Paul Volcker allowed interest rates to go to 20%, I mean, what would happen to the economy given all the debt that we have if interest rates even went to 10%? I mean, what about 5%? We couldn't even handle 2.5% in 2018, and the economy is in much worse shape now with a lot more debt than it was then.
Yeah, I know. We're talking about getting to around 1%. Look, in that CPI print, Larry, gas up 40%, used cars up 40%, appliances up 10%, food up 7%, the most since 1981, and rent, which is a third of CPI, up about 4.5%. That's what we're facing. Those numbers are higher than that overall CPI print of 7.5%. So how bad is inflation really? And do you think now with this sell-off that we're getting today, we're starting to see rates going up, that mentality priced into the market, giving Fed flexibility basically to hike, and hike?
Remember, establishment on the left for the people on the right. Excitement because he knows he's about to speak nonsense, and Peter Schiff, exactly, he knows he's about to open his mouth. And then just listen to how they both respond. Establishment to the left for the people, knowledge, and understanding on the right.
Yeah, and I think it's also testing the will of the Fed of can these kind of rate hikes, can the equity market actually sustain them? And I don't think the Fed is particularly concerned at this point with financial conditions the way they are, I should say, and the equity market the way it is today. I still think that a lot of these subsectors definitely were a little scary to read, but I took comfort in the fact that used cars, it was the lowest expansion we've had since September. It's starting to cool off, and new cars were basically unchanged, and hotels were actually down. So there's some good news in it.
Did you hear her even oh my God, under her breath? This guy's... Listen to what Peter says, though. I don't even have to say anything.
And perhaps I'm only looking at the bright side of things, but I do think pre-pandemic, we didn't have this nuance. And Peter is right. There's a savings glut. We can't get money velocity to move. But I don't think that's a problem of the Fed. I think it's the fact that we're at a point now where the private sector can't multiply capital fast enough or even at all. So it's the public sector that's going to have to do it, unfortunately. So
there's
more and more reliance on the government.
There's not a savings glut There's not a savings glut, there's a debt glut. That's the problem. Nobody's been saving. Everybody's been borrowing and spending. But rent.
If I didn't know any better, I think this lady admires Peter Schiff, or at least has a great understanding of what he does, because this he literally speaks for every man on YouTube that you can even imagine who tries to talk up the economy or tries to make it look like it's not so bad. There's nothing this guy's saying that even has any credibility. It's mind-boggling that Peter even has to talk to people like this.
Peter, finish your thought. Peter, finish your thought. Then Larry, you can respond.
Yeah, because she said that rent
pandemic.
Let me.
All right.
See? And this is what they do. They talk over. And so this is where it gets good. And I'm not going to interrupt for the last 119.
Yeah, rent, according to the figures you just gave, rent is up 4%. Rent is up 3 or 4 times that much. The government is lying about rent. Yeah. That's a third of the CPI. They're using owner's equivalent rent. That number.
Remember, I've talked to you about owner's equivalent rent. Maybe he'll give you a better explanation of it right now.
Doesn't exist. Nobody pays that rent. If the government used actual rent or home prices, the number would be much higher, and that would reveal a much higher increase in the CPI. There is no way you can fight historically high inflation with 1% interest rates. 1% interest rates was the rate that Alan Greenspan slashed rates to in 2002 to stimulate the economy after the stock market bubble popped and we had that recession. You can't fight inflation with stimulative monetary policy. You need restrictive monetary policy. And no one's even talking about making money tight. All they're doing is talking about making it less loose.
All right.
And you can't fight inflation with
Schiff,
loose money.
Larry, Shover, we do have to go, but I think...
See, how often do you see XRP Future Millionaire here at 12:49 p.m. Eastern Standard Time on the East Coast in the United States of America? But how often do you see them cut off, let Peter Schiff talk last and then cut off the other person? Never. So she told Larry, hey, you can talk after Peter. And then she said, all right, we got to go. We're out of time. The narrative's changing, folks. Even these people that come on, like Larry, and talk, the nonsense, even the people on Fox Business can't let them talk like that anymore because it's so insane that they keep that up with that narrative. So we don't have any real news of what's going on in the emergency Fed meeting. We're going to have to read the notes, read the timelines when it comes out, and read the facts and the statements that come out because it's not for anybody. It's a closed meeting. But like I said, I could see an artificial pump happening. Maybe it's 1%, maybe it's 5%. Just on FUD of what could be coming out. But nothing good is going to come from this. Our deadline is March 15th now. Between now and March 15th, we're going to have a cataclysmic collapse in the market. It could happen today. It could happen in 2 days. It could happen in 2 weeks. But because of that reason, and those reasons and more, there is no way in hell I'm getting in crypto. Excuse my French. There is no way I can buy crypto right now with that big of an overlying risk. We know it's going down regardless. There's a 100% chance that crypto is going to cut in half from where you see it now. Even if it goes up, crypto has to cut in half. And everybody's going to say, oh, Tom, why do you always have to talk this bearish BS mother scratching and Hubbards and Rubbards and whatever you want to say? Because I'm trying to be good with my language because there's a lot more grandmas and moms who are in the car with their kids and yada, yada, yada. And I'm trying to grow. So if you don't like it too, Manishkanovs. Oh. But anyhow, so we know it's going to cut. When you raise the 50 basis points, 100 basis points, when you have 7 rate hikes in 1 year, you get rid of risk assets, guys. Ready? Risk. None of these are risk. These aren't the risk assets. All right? PBR is not a risk asset. It's a dividend-paying stock. All these up here are dividend-paying stocks on my list. Now you start getting towards the risky ones. Even the mining stocks that don't have the commodities, like GPL and AU, they're not technically dividend paying, but right now they're very high. They're still high risk, but they're more rewarding right now because they're in the mining sector with gold and silver excavation, and that's going to be the flip this year. We're moving into that section this year. So gold, silver, commodities, crude oil, Companies like PBR, they're going to have big returns this year in comparison to the rest of the market. Now, NEO and Fuel Cell, those are speculative. Those are companies that are price over earnings are out of control, and they're basing their price today on future earnings, as to where these companies up here, the mining stocks, the PBR, Camber Energy is more risky. That's not a dividend paying one, but that's up there because it's towards, I put it up there because it relates to crude oil. So, but like the Fortuna Silvermine doesn't pay a dividend yet, but it's price over earnings. Everything is fantastic. Earns a whole bunch of money, and I'm assuming that's a company in the future that'll pay a dividend. The rest of these, like Wheaton Precious Metals, Barrick Gold, Equinox, Kinross, B2 Gold, Yamana, blah, yada, 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 they pay dividends. PBR pays a huge dividend, almost 16% right now. They actually paid a 1.09 per share in their last dividend payment, which is $1.05 per share. So that's what is going on right now, and I only share that with you because we're in some trouble here. Because the moment this market pumps, I guarantee you, even the 204 people in my Telegram, about 60 or 70 of you are going to be like, "Oh my God, the market's moving! I got to get in." And then you're going to say, "Tom, are you getting in?" And I'm going to say, "No. Until we hit this level, I'm not getting in." Well, why would you get in at that level? Well, because then there's a little bit of a melt up again, and then I know that we're getting past certain restriction or resistance points that are going to leave us catastrophically hamstrung. Like right now, for anybody telling you to buy right now, when we haven't even broke back over these unbelievably important levels, and where we have broke, let's be honest here. Look at the 30-minute. Does that look good? It doesn't look good to me. The RSI is getting out of control again. It's being supported on a higher flow down here. Let me open this up so you can see. So the support line is 61.86. That yellow line's the average of the RSI right now. It's much like the MA lines up above. Once it gets bottom side of that, because we're in the neutral area, so it can go either way. Right now we're on the neutral and a little bit of a bullish tendency as it's showing. But we're almost over 70, which 70 in the RSI is oversold in the 30-minute. And if you look at it in the 4-hour, we're bouncing back and forth in the neutral area, but eventually this thing's going to give out and go back into oversold for Bitcoin, and we don't have a good narrative. That's a head and shoulders topping reversal pattern, or an M topping reversal, depending on how your definition of what you want to see here, because some people could say, "Hey, shoulder," but I see that. That's what I see. So I'm just going to call it a topping reversal, so you can call it whatever you want. But I'm just showing you the facts that are in front of you. I'm showing some of the analytics in front of you. I'm showing you the MA lines that are really starting to... You got the 4-hour, the 200-day, which is the 20-day right there. And we talked about yesterday how in the 30-minute we were having a bearish divergence, which now we're starting to come back up, and you often keep coming across. And we talked about how we were going to meet at a certain area. That certain area is happening. Now you're having a rise back up that looks like you could have a small bullish divergence. But in the 4-hourly... it's just playing out this pattern. It's trying to consolidate into these areas. So now everything's clumping up. So now if you have a big dump, we're going to end up coming through and having a bearish divergence in the 4-hour. That's what it looks like it's setting up to me right now. And that would mean that this is acting as a right shoulder here, which means if this is the case, you can come all the way up to up there, and then you could come out. That's what I'm saying. That's what I'm wondering, if they're going to do something like that. But if you got some unbelievable fluff news right now, you could see a scenario where you would push these upper regions. But this is literally, for it to do this and come up here and finish off this cup, because that's what you'd be looking at potentially. And then you would be able to make a play, probably if they wanted to get overzealous at the 50K, the ultimate psychological level, and then dump out. This, to me, has like a 10% chance of playing out, maybe 15. You can't take it off the table because manipulation is real. And in a scenario like this, I could totally see them playing two different games. Either bouncing up here and having this quick run up because we don't know what's going on. Have a quick 3% run up in Bitcoin. And then either sell off massively, or they bring you up to these levels where you have this 11 to 15% gain in Bitcoin. And they absolutely hamstrung people. If we do have that scenario, we're going to find out when we get a daily close if we can get back over that like 43,255 or 43,300 level, you would at least want to see a close start heading back up in that way. Right now, everything is below major resistance levels, and this would be absolutely catastrophic if you get in and mess this trade up. Because, like I always tell my Telegram, we can wait and see what happens, but once you get in and lose, you lose. Once you lose the money, it's gone. You can make it back in a future trade, but if you do the same thing, you know, now you're pushing. So, we don't want to get caught in those spots. I know it's been an extremely long update. We focused on Bitcoin. I just want to talk about algo real quick. We got algo below crucial resistance points at 9163, and that we'll just put the moving average right here on the 4-hourly, because that's our most important part. If we can't get over that, we have no chance. So we've got 9213 that we got to get over. We're being pressed right now, though, in between a tight area. You've got 8724 where we fell down through. You've got a resistance overhead at 9213, which was the old drop point up in there. So could I see us retesting there? Sure, I could. The problem is we're very low volume. It's going to continue to be a problem, so that's the points you have to look at. I could see it happening. You're getting some support on the 20-day right now, but as long as you're under that 4-hour and the 30-minute, which is up there at 93.10, you're very bearish. And this just looks like it could finish off a cup in here. That's what I'm saying. We could have a few percent move here. And we're on top of the RSI in the 30-minute, which means we're getting supported by the RSI on the, uptick. So I wouldn't be surprised if we had a small rebound here. But to me, the risk is so far outweighing the reward that you would have to be, I don't know. To me, it's just, why would you even take this gamble when you know in the future that this is going to drop like a rock? 804, 806, whatever you want to call this area. This is your support resistance area on the 200-day and on the 20-day and the 30-minute time frame. You're trying to get support here at 79.99. We're just below it. Let's just put it that way. We're trying to get support at about 80 cents. We're below being resisted upon that 80-cent mark. So that's very bearish. If we're on the bottom side of this red line right here, that's the ultimate bearish signal. And then furthermore, our resistance line right there that was support before the drop is right there as well. So we came up, retested the drop point. A lot of wick pullback downs in the down direction, a little bit on the up direction in the last 30-minute candle before this one. But overall, I'd say we're looking very bearish, and we have to be very careful. XRP Future Millionaire, make sure to hit that like button. If you need more help, make sure to join the Telegram. The only way to get the Telegram is to join Tom's Army, $9.99 a month. And within the Telegram, you get all of this and more. Talk to me, talk to everybody else. And when you join, you get all of this. Every single message that was ever put in here is yours at your disposal, and you can see everything we do so you can get used to the flow, be able to get updated very, very, very quickly. Hashtag be better, do better. Hashtag FUD assassins. And remember, help one person each and every day, because if you don't do your part and I don't do my part, who's going to do their part?